Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are easy to identify as far as their trend right now. As we can see, the indexes cannot get back up above the T-line. The T-line rule says as long as you're below the T-line, the assumption is that you have a high probability of still being in the downtrend. So note today that even though the Dow tried to trade up higher again, they closed back down below the T-line. Same scenario here on the NASDAQ. Thursday, when it failed to climb higher, they started selling it off. That was good assumption that the downtrend remains in progress. Now, knowing that allows us to make much more profitable trade setups using the high probability option trade factors that we've been kind of pushing here the last few weeks. That anytime we can see a pattern like a dumpling top, we know what the expected results are. So we've been seeing that in ring. There's your dumpling top. You're heading lower. And remember what happens coming out of a dumpling top, just the same as what comes out of a fry pan bottom. As the bearish sentiment builds up, that creates very strong moves to the downside. So that's where, if we know the indexes are heading lower and we can see a pattern setting up, that's where you go after it more aggressively with the expectations of prices moving lower. So there are different places where you can take advantage of the price move. There's the bearish engulfing signal on Twilio with a gap down below the T-line away from the 50. That was a good place to start buying puts. Now you're down here in the oversold area, and it still looks like the pattern is working, but you might be more apt to do put spreads, which have much greater probabilities or risk factors to them, where you have less money exposed and it doesn't have to move as far to make some very good returns. Same thing on Monday. Right here would have been a good time to be buying puts. A lower open tomorrow would be a good area to be buying put spreads. We can see that in Apple. If you see this open lower tomorrow, where do you expect the next target to be? Down here. So right now, the April 29, 165, 160 put spread is trading at $1.79. If this is the likely target, that means that $1.79 will go to $5, obviously a very good rate of return. And you can do it with much better prospects. Again, the leverage of a spread would mean to make that same rate of return on the spread, buying just puts right here means they'd probably have to come all the way down into this area to make that same percentage return. So this is the type of thing that we're going to be going through on our training Saturday. But remember, just because the market's heading down, that doesn't negate the prospects of finding good, strong, bullish trades that are going to go against the market. Our best friend signal is one of your strongest candlestick reversal signals. Our recommendation today was to buy on positive trading. So as it came up through the 50, that told us that this signal was working, even though the market was in a bearish direction. So join us October 23rd, this Saturday. Be a full day training where we can identify where the likely spots are to be buying call spreads, or buying puts, or put spreads, or combinations of those. This is where you gain a huge advantage of knowing not only what the direction of a price move will likely be based upon candlestick signals, but then applying the most profitable option trade strategies to take advantage of that price move. That'll be it. We'll see you in the chat rooms.